Sure. Yeah. So good evening, ladies and gentlemen. I welcome you all to the Indian Bank's post-results conference call for the first quarter of financial year 2027, hosted by Nuvama Wealth Management. From the top management, we have with us Shri Binod Kumarji, MD and CEO, Shri Ashutosh Chaudharyji, Executive Director, Shri Shiv Bajrang Singh, Executive Director, and Ms. Mini, TM, Executive Director. I request the MD sir to briefly summarize the key highlights from Q1 FY27 results and also provide some strategic direction on growth, margins, and asset quality, post which we will have a Q&A session. Over to you, sir, and would request to keep your comments brief so that we have more time for Q&A. Over to you, sir.
So, Anand, first of all, I really am sorry that I will have to leave at 6:30, but it is something urgent, so I didn't get leave of absence.
No issues, sir. I think. No issues, sir.
Conference can continue. Mr. Ashutosh and Madam is here, they can handle. Some question answer is
sure,
here,
sir.
They can handle. So now coming to the, first of all, thank you all once again for coming in for the this analyst call. By now, result has been published and we have seen good growth in deposit also and advance also. Very balanced growth, I will say. Deposit also grew 13.40%, advance grew by 13.90%. So there is only 40 basis point gap is there. And I believe that gap should be deposit and advance growth gaps should remain range bound. Otherwise, if this gap is very wide, then it starts impacting your overall profitability, NIM, etc. So very balanced growth. And highlight is CASA has grown by 15.30%. And in that, saving fund has grown by 13.54%. Current account has grown by 26.33%. Advance overall and CD ratio domestic is at 78.66 and CD ratio global is at 81.06. CASA sequentially it has gone up by 6 basis points. YOY basis around 86 basis points. Advances has grown by 13.89% to 6.85 crore. In that, if you see, corporate has grown by 11.49%. RAM has grown 14.80%. Retail has grown by 18.74%. Agriculture, single digit 9.96%. Because of the transition of the jewel loan, the first 2 months, because of the various IT issue, various policy are to be framed. We have but after 2 months it picked up. Initial 2 months there was negative growth. After that it has picked up and we have shown a growth of around 10%. So no concern on that count also. Going forward, we will maintain the growth in agriculture also in the range of whatever we have been getting, around 15-16% agriculture also will maintain that. MSME 17% growth is there. Overall, RAM share is 60%. Net profit sequentially has gone up by 5.48%, YOY 10.09% to 3,273. Operating profit sequentially 5.13%, YOY 16.51%. to 5,557. Good growth in NII, I think YOY 17% and sequentially 4.9%. NIM both domestic and global has expanded by 6 basis points. Return on asset also, YOY basis of course it has come down by 3 basis points, but sequentially it has gone up by 3 basis points. Return on equity 19.48. Cost to income ratio, it has come down from March. For whole year, last year it was 46%, but for this quarter it is 44.80%. Going forward, I have given guidance of 45, so it will remain in that range. So no concern on that count. PCR 98.22%. We would have maintained the last year, financial year, it was 98.28. We could have maintained, but then again, net to NPA would have come further down from 0.15 to 0.14 or 13. So that's why we leave with it. Credit cost 0.47 in March 26. It has come down to 0.23. There were some concerns in the last analyst meet around credit cost going up, but that is March phenomena. Even last time I have told that is one of March phenomena, and I am again saying March again it may go up because of the audit, etc. But overall, remaining 3 quarters it will be definitely slippage also, and credit cost will be range bound only. Overall capital, my capital is 17.58%. CET1 is 16.51. Impact of IFR 2,000 crores, so that has gone from tier 2 to tier 1. Impact on 44 basis points. Gross NPA has come on YOY basis 115 basis point to 1.86, sequentially 12 basis points. Net NPA is flat at 0.15. Slippage ratio 0.77. In last annual it was 0.96, so it has come down also. Recovery if you see, recovery has outpaced slippages. Recovery is 1,885. Slippage is 1,250. One big account, recovery has come in that account around 400 crore, which we have booked in this quarter, so it is contributed by that. SMA, of course, SMA overall number is flattish, but SMA 2, more than 5 crore has gone up by around 190 crore. Out of that, one account DCCO. That account has come to SMA 2 because of the DCCO. DCCO extension has come, and accordingly, repayment schedule will also be extended. So demand has been generated. So once we permit extension of the DCCO, even that SMA will be within the range. So, and guidance, almost all guidance we have done. We are on track. Recovery, we have given guidance of between 4,500 to 5,500. Already we have achieved almost 1,900. Gross NPA also we will be achieving between 1.50 to 1.60. I think we should achieve easily. I don't see any challenge in that. CASA also I have told 40%. I am on track of that. 39.73 we have achieved this quarter, and going forward, of course, CASA still is a challenge, but I expect with the support of all the staff and that we will be maintaining that. One good thing I will highlight, participation of branches has increased. Last year, during this period, only 25 to 27% branches has achieved the target. But this quarter, they have achieved 51% of the branches has achieved their target. So that is one good sign that branches have started participating. So broadly, all these things, straightway we can come to Q&A so that we can utilize the time.
Thank you, sir. But before we open up the Q&A, one question that I want to ask is that do you see any MSME stress? Few banks basically talking about that. And second, have you sanctioned an ECLGS credit? And if you can just talk about what is that as a percentage, in absolute amount or maybe percentage of rate?
Yeah. See, MSME stress, if you ask me, even we were expecting that there may be some stress. But so far it is not visible. As if you see, my SMA book YOY basis, it has come down from 7.99 to 4.69. Sequentially also it has come down from 4.73 to 4.69. So as of now, we are not seeing any stress. But going forward, let us see. And coming on EC, and some stress is there, then ECGLS will come to the rescue of such accounts. ECGLS total eligible amount is approximately 11,000 crore, depending on the formula given by the government. And out of that, around 5,000 has been disbursed.
Okay. Sure, sir. Now I'll open up the floor for Q&A. Any participant, if you want to ask a question, please use the raise hand option. Yep, I think we have first question from Ajmera ji. Ajmera ji, please limit your questions and the commentary because we have limited time. Yeah.
No, thank you, Anand.
Thank you, sir.
For giving me the first opportunity. Sir is also in a hurry. He has to leave. So, sir, compliments to you for such a wonderful performance in the first quarter itself. In fact, very good profitability, the operating profit, net profit, you performed on most of the parameters so very well. So my compliments to you for that same. Having said that, sir, since you are there now and you are going to leave a few just thoughts and some observations from you. is basically on the same which Anand, I will extend that question only a little further. That of course you have not seen you said that that kind of stress has not been visible so far. But 5,000 crore has already gone as a disbursement from the ECLGS special credit which has been started by the government again. So sir, even I mean your SMA2 numbers have also gone up little higher from 922 crore to 1112 crores. So actually, do you see that this whatever situation, you know, even that whatever is happening in US, Iran and Israel, Iran and this, whether it is going to have some lasting impact especially on the small industries and the businessmen here in India, and will you see some stress coming forward in that?
See, as I told you, SMA2 has gone up because of one account. That is one account when we extend DCCO, I think that will go away. So not impact of that. But see, actually, if you ask me, I was also expecting that, there should be some impact. But if you see country as a whole, we have shown very great resilience. I was expecting since August 2025, when first time Trump tariff was imposed. But despite that, if you see, because of the internal good demand and good consumption, and our exporters have been able to diversify their export from one country to various countries. So we have not seen much of the impact, but still we remain watchful. And that's why, that is the reason we have last quarter also we have made impact of provision of 310 crore for West Asia crisis, which we have continued. And because increase of exposure, 12-13 crore further we have made. So we remain watchful, but so far it is not visible. But if something is there, we have capacity to absorb.
The standard advance provision also has, I mean, you are referring to that standard provision on the standard credit also has gone up from 290 crore to 733 crore.
Yeah. So impact of West Asia crisis is 13 crore in that one. Rest we have made prudently, like ECL provision we have also made around 1,000 crore. Floating provision for ECL we have made.
Yeah,
please.
Yeah, how much is that?
1,000 crore.
Yeah, on ECL total.
1,000 crore we have made additional provision, floating provision.
Floating provision. In addition to whatever earlier provisions were there.
Whatever earlier. Yeah.
Sir, on the treasury front, I think in this quarter there was some good benefits which are enjoyed by many of these bank treasuries. So in our case, comparatively, the profit vis-a-vis the last quarter has not gone up to that extent. So whether anything on that we have taken some mark to market, or more profit has gone into the AFS reserves in the treasury?
Yeah, AFS reserve, which was negative last year, it has gone up.
Yeah.
AFS reserve last quarter it was negative 100. Now it has gone up. So 500 it has gone up. And treasury, in fact, let me tell you, I was expecting profit of only 250 to 300. But last week some yield came down. That's why this profit is there. Otherwise, in my calculation, it was only 250 to 300.
Okay, so according to you, this is back for what is
this is better what I have expected. Yeah.
Miraji, I think we're done with two questions.
Just one, Anand, just on the credit front, going forward, in this quarter we have moved by about 2.62% as compared to the March. So, sir, going forward, because the overall we see in the kind of figures, numbers which have come, that the overall credit growth, from the entire banking has gone up. So people are talking about 17-18%. Bank of Maharashtra on the whole year it has given again 27% growth, and this quarter also it's around almost about 5% growth. So for the whole year, the FY27 now, what do you think the credit growth can be in our banks?
See, growth is not a challenge, Raji, let me tell you. Growth can be done. Whatever you ask, if you see, if my agri grow by 60%, my RAM growth itself will be 17-18%. We can grow, but we should also at the same time remain mindful of the wide between credit growth and deposit growth. So I am mindful of that because if situation should not come when we start eating our margin. So based on that balanced growth I will approach. If I can grow deposit by 13%, I won't mind growing advance by 15%. So based on that and also not compromising on the NIM. But 13% growth is a good growth.
But I think you will achieve 16%. Anyway, so thank you very much, sir. And
Thank you. Thank you, Ajmera-ji.
Thank you, Anand.
Yeah. Next question we'll take from Maruk. Maruk, please unmute yourself.
Hello, sir. Congratulations.
Thank you, Maru.
Yes, sir. So I had a couple of questions. Firstly, do you see gold loans picking up? It's competitive. Prices have also been volatile. And then how much has been added to AFS reserve? And the third question is on FCNR. So I saw your comments on TV. You've said it before also in calls that the target is to mobilize $1 billion. But how much have you already mobilized? Given that this time round the IRRs look much weaker than the 2013-2014 IRRs.
Mm-hmm. See, first, AFS reserve is 500 this time. Last time it was minus 211. Presently it is 334 plus. So total you can say 546. Coming to FCNR we have so far raised around 150 million as of today. Till yesterday it was 135. We have raised around 150 million. And going forward, I have given estimate that I will be able to range between 1.5 to 2 billion. Challenge is not in raising FCNR. FCNR we have lot of traction. 1 billion pipeline I already have. Challenge is in the funding, whatever demand they are asking, they are taking demand loan or whatever. So challenge is in the funding of that loan. But we are managing and quite hopeful that between 1.5 to 2 million, taken together both ECB and FCNR, I will be able to raise. Hello?
Okay, thank you, sir. On gold loans?
Gold loan. Gold loan, see, like last year, I don't expect growth of 28%, 26%, because that was driven primarily by not by the tonnage, by the price of the gold. But I see around 15, 16% in the gold loan also, this year also. And no concern on that. LTV also, even after the drop of 30% in the gold loan, our LTV is still at a very comfortable level. So don't see any stress in that.
Okay, sir. Thank you.
Thank you, Maru.
Yeah, thank you, Maruk. Next question we'll take from Jayant Kharote. Jayant, please unmute yourself.
Hey, thanks, Anand. Congrats on a good set of numbers. So first question is on the margins. We saw healthy expansion QOQ. I think one of the positive surprises come from the cost of deposits. QOQ, we've seen some tightening in the first 2 months, yet you have seen a decline. So if you could help us break down, are these gains back-ended, where you sort of rolled over some of the bulk in the last month? And then, of course, the reason I'm asking is, of course, because then that can sustain going into 2Q, 3Q. So if you can spend some time on what has driven this cost of funds and cost of deposit gains. And second is also on the reported yield on advances have moved up, it seems, by 2 basis points. Again, a small number, but anything to read, any particular products that are, again, what I'm looking at is the sustainability through the next 2-3 quarters.
Yeah, so basically, if you see on deposit side, I always remain very careful of what rate we are getting. CASA, we focus on lot of CASA. And bulk also I remain very careful. And let me tell you, borrowing, I remain normally on the borrowing side. Borrowing you get at around what rate? 5.25. And even if you have to raise bulk for 30 days, 60 days, that cost will be around at least 150 basis points more than that. So I remain on the borrowing side, so that also helps. And bulk also we remain very careful. Bulk, if you see, my bulk is at the same level as March. It has not gone up. 161 lakh crore was the March, 1.61 lakh is the June. So bulk we have not increased. So that has actually helped. And when it was picking up, was like it was going 8% or it was going CD going to 8%, bulk going to 7.7, 7.8. At that time we were not in the market. So that has helped, and partly it has also helped by the repricing. Maybe one and a half basis point that has also helped by the repricing. Similarly, on the advances side, advances also we remain very careful of the very thinly priced loans. We remain very sensitive on that. So wherever we get opportunity, either we exit or we get, better rate as compared to the last quarter. So when I give any quote for the WCDL or LOC, what is full form of LOC? Line of credit. So whenever I give any rate, I always remain mindful that my cost of bulk has gone up by 40 basis points, whether I am able to pass it on or not. I remain mindful of that. So. And the LOC, line of credit, on sequential basis, I have shaded around 6,000 crore, where rate was very competitive. So hopefully, this trend should continue.
So this means you will be probably looking to deliver at the upper end of your margin guidance for this year. If I'm not wrong, it's around 3.15 to 3.25.
Yeah, hopefully. Because
for
margin expansion, there is no trigger now. Unless there is a rate increase, some repricing, but MCLR repricing and bulk deposit repricing will be compensated. MCLR also around 2 basis point impact will come in this quarter, negative. Similarly, bulk will be around 2 basis point or 3 basis point. So it will be compensated basically. So not seeing much margin compression, expansion from here, but very rightly you told around upper band we can expect.
Sorry, again to double click, how are the rollovers in retail TDs? Are you facing competitive intensity going up there? Retail term deposits?
In between it was, but not now. In between it was, when bulk was touching 7.8, 7.9, at that time banks have started increasing their retail term deposit rate also, but not now.
Okay. So sir, I missed this part of the provisioning. If you have done any accelerated provisioning for ECL this quarter on standard assets, if you can call out that number. And second, ECL
I have made 1,000 crore floating provision straightway I have made.
In this quarter?
In this quarter, yes.
Okay. Sir, on ECL, what is, now that you've had time to spend, how is the net? If you can tell us the gross and the net impact both on steady state credit cost, because now you would have had a good time to spend with the new guidelines. How does the credit cost look?
Yeah, so my expectation is my impact of ECL transitioning will be around 3,000 to 3,500 crores. Out of that, if you remember, I have told that around between 1,500 to 2,000, I will try to make provision during the year. Out of that, 1,000 I have made. My endeavor will be to make another 1,000 during the year, between 500 to 1,000. My endeavor will be to make that. So on the transition side, there is no impact, but the steady side, no impact. But flow, of course, there will be some impact on the credit cost. So credit cost, you can say it will be, now standard provision is in the range of, say, for simplicity, you take around between 4 to 0.4 to 0.5. So 0.5. And in ECL era, it will be around 1.5. So 1% increase will be there on the standard. So whatever growth is coming, say I am growing by 12%, and 1% of that means 12 basis point credit cost impact will be there on the flow basis. Net of tax maybe around 9 to 10 basis point.
Sir, this is the net impact, right? Because you also release some release from stage 3 provisions or NPA provisions, right?
No, region final guidelines has come where it is required that more provision on D3 and loss asset has to be maintained at 100% floor. That means and bulk of the provision is lying in the D3 and loss asset. So there will be hardly any release from there.
Okay. So basically, sir, 12 basis points.
Then we have to move.
Oh, yeah. Thanks sir, for congrats on this call.
Yeah.
Thank you.
Jay, please unmute yourself and ask your question.
Yeah, hi, good evening, sir, and congratulations on a steady number. Sir, I just was trying to understand I picked up on your TV interview wherein you had said that margins now have bottomed and ideally should go up. And just now, I think you said that you are looking to sort of looking at similar margins. Margins will not go down, but it may not go up also. So I just wanted to check, sir, what is the final verdict?
No. Actually, see, Jay, when I said bottomed out, it is fact. See, now there is no trigger that it should go down unless rate of interest is decreased. But at the same time, there is no trigger also that it should go up. Maybe marginal. There also I have told that it may expansion maybe by not much, maybe 2 basis point, 3 basis point.
Okay, understood.
Yeah.
And sir, we had already made 10% provision on SMA 1 and 2, right? So that provision you can use for ECL transition, right? That is one of the components for ECL transition. You are, what is the gap in understanding? I thought that provision could also be used.
We will be using that.
Okay. So apart from that, 3,000 is.
Whatever we have made, apart from that, impact is around 3,000.
Okay, understood, sir. And sir, just lastly, have you also done IBPC in this quarter also, and the quantum?
No. Only 200 crore has gone, not much.
Okay, sir. And if you can quantify the total gold loan, sir, you have given the retail June loan. But the total, which is including agri and SME, the absolute rupees crore numbers.
The loan total is 1.32 lakh crore.
That is the total number, right?
Total number, yes.
Okay. Thank you, sir. All the very best.
Thanks, Jay. Next question we'll take from Ashlesh. Ashlesh, please unmute yourself.
Hi, sir. Good evening. 2 quick questions from my side, sir. Firstly, in the market, now, do you see any changes in the competitive environment, especially the pricing on home loans and corporate loans? So that is one. And second one, just to clarify, on the cost of funds side, is there any more repricing of term deposit that is pending?
Yeah. So pricing side, yes, there is lot of competition still. You see vehicle loan, home loan, corporate loan, particularly in good rated account and good PSUs. A lot of competition is there. So that remains. And cost of fund, you are asking on?
If any further repricing is pending?
Repricing, yes, of course. But impact will not be much, maybe 2-3 basis points now.
Understood. So just one follow-up on the previous one. Any changes in the competition? Are you seeing it even marginally, let's say, intensifying or improving?
Competitiveness is, same level. Already it was cutthroat still. Only on the bulk side, I am seeing that I don't know, all of a sudden it has cooled down. But otherwise, housing loans is 7.15, 7.20. Nobody is nobody is taking lead to reduce it. Some big bank only will have to start.
Understood, sir. Perfect, sir. Thank you. Those are all the questions I had.
Thank you.
Thank you, Ashlesh. Sir, you want to continue or I think you have a call.
Yeah, one, two question I may take.
Sure. So we'll take a question from Param now. Param, please unmute yourself.
Yeah, thanks, Anand. Sir, I wanted to ask on the fee income in this quarter. The fee performance is very strong, and you have given some details, sir, in slide 17, where I think the fee is being driven by miscellaneous fee income and strong loan processing charges. So what is happening in miscellaneous fee income? So it has been strong for a couple of months.
Two, three income has been added. Just a minute. Syndication.
Slide 17.
Yes, syndication fee 272 crore we have earned. We have done two syndication, and also just a minute. YOY basis we are asking. Then some income has come from DEF incentive also has come. 30 crore DEF incentive has come, and CBDC cost reimbursement has come in shape of whatever cost we have incurred CBDC. So around 47 crore is that, 72 crore is syndication fee. These are the primary drivers.
And loan processing charge of...
Yeah, sustainable. Underwriting will do. Loan processing charge is sustainable. Underwriting also, as and when we get opportunity, we will do.
So is there any rate increases you have taken in your processing charges that is driving this?
No. But only volume increase.
Okay, sir, perfect. Very quickly, sir, the LCR for this quarter, and what is the outlook for treasury profits going into next quarter? Because, sir, the G-Sec yields have come down pretty sharply and maybe might come down further as the FCNR liquidity comes in.
So LCR is 123 for this quarter, and treasury profit 6.75. I don't see going maybe 5-6 basis point. That too also if Bloomberg inclusion happens, maybe it may go up to 6.65. Otherwise, below that I don't see yield cooling down. So treasury profit, I don't see much contribution from the treasury. And in my calculation, I have taken treasury profit for the year around only 600 to 700.
Okay, sir, got it. And sir, LCR has not improved quarter on quarter because the new LCR calculation was supposed to help.
But see, I told you, not you, we remain on the borrowing side from the trips and call market, because we are getting cheaper. So that has to be every day repriced. So that is also impacting my LCR.
Okay, sir. Got it. Thank you so much.
Outflow will be every day, no? So that is also impacting my LCR.
Yeah, thank you, Param. Next question we'll take from Kaushik from Haitong. Kaushik, please unmute yourself.
Hi, sir. I hope I'm audible.
Yeah,
sir, I just have one question. I was seeing the data for the sectoral deployment which you have put out in your PPT. There I was seeing that the growth towards the NBFC has been roughly around 2% on a YOY basis. Now compared to the industry data which comes out from the RBI, there the growth has been very phenomenal. So is there something which you are noticing in that particular piece which you would like to call out? Is there any lot of competitive intensity is there? That is only the question that I have to ask. Thank you.
In NBFC, we were very selective. We are participating mostly in AAA, AA only. Many opportunities are coming, but we are very selective in NBFC. That is the reason if you see from June to March, it was negative growth in NBFC, only around 6,000 to 7,000 crores. Only this quarter we have added some around 3,000. So keeping in view that there will be some repayment during the year.
Okay. Thank you, sir.
Now,
Thank you, Kaushik.
Please excuse me, Mr.
Sure, sir.
will take further questions. I'm extremely sorry for this.
Sure, sir, sure. Next question we'll take from Aman Singh. Please unmute yourself.
Hello, sir. Can you please help me with the all-inclusive data on SMA1 and SMA2?
All inclusive means
All
want
ticket
more
size
on
data. All ticket size.
all ticket size data. It is both. You want both SMA1 and SMA2 put together?
Yes, sir. No, sir.
It is
Individual,
around-
if you can give.
Okay, individually want SMA1 is 7,000 and SMA2 is 7,700. These are approximate figures, huh?
Sure, sir. Thank you.
Thank you, Aman. Next question will take from Sushil Choksi. Sushil, please unmute yourself.
Congratulations to Team Indian Bank for the excellent result. My first
Thank you.
question is, Ashutoshji, liquidity led by FCNRB and ECB is going to be anywhere estimated between $50 to $70 billion. How do you see that impacting Indian Bank? Because Vinodji already said that we will be taking only 1.5 to 2 in your estimate. The system would be liquid between 4.5 lakh crores to 7 lakh crores. How do you see the impact on GSEC? He already spelled he doesn't see below 60.65. But on our cost of funds, maybe some diversification on lending book, maybe some cross-border transaction because M&A is also open. You'll have sufficient dollars. What is the outlook from your international book led by Singapore or any other zone?
Yeah, Choksi, we are planning for 1.5 to 2 billion in FCNR, including the ECB. So roughly will be somewhere at 18,000 crore liquidity that will be available to us. And if you see the cost, that will not be very much lower. My cost of deposit, if I will take at 6.5, so the costing will not reduce. This is the first point I would like to address to you. The next is that the domestic credit demand is robust, so we can easily deploy this amount in our domestic credit space. The third one is that with this flush of liquidity, the only thing we have to see is that government borrowing program in the days to come. How that will plan out, that will decide the 10-year DSEC rate. So that is where we are thinking it is around 6.65. It may come down, even if this liquidity flow will be there. So this is our thought process regarding the liquidity and its impact on interest rate.
Sir, any view on your digital spend, maybe cyber security, new initiatives at the bank? What kind of initial or extra budget you're forming because of a high profitability?
Sir, the budget is, I will tell you, the capital budget will be around 750 crores for looking at the AI initiatives and cyber resilience. We are taking a couple of steps, strengthening our CSOC. We are planning to implement UEBA and the zero trust architecture for our cyber resilience posture, for which we have marked this. So also we are planning to go for a data lakehouse, looking at the DPDP Act. So uniformity of data, availability of data at one place. So that also program is on. So it will be around 3,000 crore of IT budget, capital as well as revenue, in both together.
Any view on consolidation?
Consolidation of what, sir?
Bank.
Oh, so the prerogative, let it be with the government of India. They will take a call even if they have anything in mind. So I think so. I'm not in a position to comment on that.
Are we happy to absorb anybody, or you would like to stay standalone?
Choksi, no comment from this side. This is a very Yes.
Okay, I
I
leave it
think-
to off.
Sir, I think we'll have to move to next question. We'll take question from Jayant. Jayant, please unmute yourself.
Hello. So just clarifying the previous comment on provisioning of 1,000 crore this quarter. Just unable to add the math, sir. Can you help me? First said you have provided 1,000 crore of floating provisions in this quarter. I see in the PPT breakup that you have given NPA provision of 360 and then standard of 700. What am I missing, sir?
The missing is that the 737 is the net figure we have given here. Some provisions are released, some provisions are met. So that is where the net figure is 737 in standard advance.
Sir, you are saying 1,000 crore you have made floating towards ECL, and you have got a release in your standard book from some other asset, and that's why net is 730. Can you break down the difference, sir? How much? I mean, the difference is exactly the release. Okay. Sorry for that.
Yeah.
I get the clarity. Thank you.
Thank you, Jayant. The last question we'll take from Jay. Jay, please unmute yourself and ask your question.
Yeah, hi, sir. Thanks for the opportunity again. Sir, I missed the explanation for why the LCR is stable. I think what you mentioned that the now bank is borrower in the repo market. Is that the explanation, sir?
Yeah, yes.
So, sir, if you, any bank can borrow in the repo, right? It is anyway cheaper than maybe the CD or deposit rate, right? So, I don't understand why. What is so different that we have done in this quarter? Repo rate is clearly cheaper than TD or maybe bulk TD, right? So, ideally there should have been a release. So, if you can help.
Yeah, definitely. There, three things is required to keep in mind. Your credit growth amount, your deposit growth amount, and we should also think how much of my credit will be funded through borrowing. So it's a combination of these three things. So suppose I am growing at 100 rupees and I require 125 rupees, in which source I am managing this 125 is more important. That is why MD sir was telling ki as far as possible we are going for borrowings. We have a borrowing limit. Based on that we are borrowing, and thereafter the rest is funded through deposit. So that deposit composition is also one aspect. In that deposit composition, we are not much relying on bulk deposit, which is a costly affair in Q1. So all these three put together has given us this result. Because of this borrowing, I am able to maintain 123 LCR. If I will not depend on borrowing, it will definitely go up.
Right. So in a way, you have used the excess liquidity to actually increase the growth, right? In a way, otherwise you may have to rely more on deposits. Now you have borrowed and funded that growth. Is
correct.
In a way.
Correct. Yes.
Okay. And sir, lastly, if you can help the PSL income, right? It has actually YOY, it has declined, and we have grown gold loan in a decent way. I thought the market for PSL is also decent. So why there is a decline YOY?
If you see Q1 also, the Q1 figure is not high last year. If you compare to Q1 25 and Q1 26, you will find there is an increase in my PSL income. And PSL income, this is the quarter I have booked and I have divided into 4. This PSL income opportunity will also come in Q2 and Q3. So whenever it will come and I will keep on adding, so my Q2, Q3 and Q4 figure will keep on changing.
Right. And sir, looking at this,
what I am saying, last year Q1 and this year Q1 you see, there is a growth. Subsequently, whatever we have earned, that we have added in that particular quarter. So in Q4, whatever we have earned, we have added in Q4 of 26. So similarly, in the Q4 of 27, we'll add whatever we'll earn during that time, during that quarter.
Okay. So, but sir, I am not asking Q4 versus Q1, but Q1 you would have whatever you would have originated, you divided by 4 and you book it in Q1, right? And the same has happened in this year. This first quarter. So YOY number are comparable, right?
YOY number is only comparable. That is what I'm trying to emphasize there.
Right. So, okay, sir, if I look the number, that looks like that PSLC income last year, first quarter was 18. Okay, it has actually gone up only.
Yes.
Sorry, sir. Okay. Sorry, sir. And lastly, sir, looking at the insurance number that we have given, which band we are in, sir, now? I mean, insurance expenses has declined by around 20%. They have declined 19% YOY, right? So we are in bracket 1 or we have bracket 2 for that.
Yes, it is in the bracket 1. No? We are in bracket 1, Jay.
Okay. Thank you, sir, and all the very best.
Thank you. I will take that as a last question. With this, we come to the end of Indian Bank's post-results conference call. Sir, if you have any closing remarks to make, we can end the call.
Yeah, Anand, whatever the guidance you have given, we are sticking to all the guidance. And the guidance in the upper quartile will fall based on the Q1 results, what we understand. Yeah, that is the only closing remarks. Yeah, thank you.
Sure, sir. That's very helpful. And best wishes on behalf of Nuvama. We end the call now. Thank you, everyone.
Yeah. Thankful to our investors and analysts for giving their support. Thank you very much.
Thanks, sir.
Thank you, Anand.